There's a major migration shift happening in America right now, and it is not getting nearly enough attention. For decades, the story was simple. People left older industrial states and moved toward the coasts, the Sun Belt, and the fast-growing boomtowns. California had the jobs, Florida had the weather, Texas had the growth, Colorado, Arizona, Nevada, Tennessee, and the Carolinas became the places everyone talked about. The Midwest, a region that was often treated like a place people were leaving, is now pulling people in. At the same time, the West Coast is losing people through domestic migration, and the South is still growing, but much more slowly than it was during the pandemic boom. That matters because migration affects everything around housing. It affects home prices, rents, construction, jobs, wages, local tax revenue, and the long-term future of entire cities. When people move into a region, demand follows. When they leave, housing markets can weaken fast. The most surprising part is what is happening in the Midwest. Migration into the region has jumped to its strongest level in more than 3 decades. That is a major reversal. Since the early 1990s, the Midwest was usually not the place attracting the most attention from movers. Now it is becoming one of the most important regions to watch. Meanwhile, the West Coast has moved in the opposite direction. Since the pandemic, migration has fallen into negative territory and stayed there. California is still losing people, but this is no longer only a California story. Colorado, Washington, and Nevada are also slowing down, and in some cases losing more people than they are gaining. Colorado used to be one of the clearest winners in the country. For years, it brought in tens of thousands of people from other states. People wanted the mountains, the lifestyle, the jobs, and the growth. But after the pandemic, that trend weakened sharply. By 2025, Colorado had turned negative. Washington has also slowed. Nevada, which used to benefit from Californians moving out, has seen inbound migration fall close to some of the weakest levels in years. For a long time, people were willing to pay extra for location. They wanted to live near tech jobs, major cities, warm weather, mountains, beaches, or fast-growing metros. But after the pandemic housing boom, the math changed. Home prices went up, mortgage rates went up, insurance got more expensive. Property taxes became harder to ignore, rent stayed high. That is where the Midwest starts to stand out. In states like Ohio, Indiana, Iowa, Kentucky, and West Virginia, the cost of owning a home is still much lower compared to local income. The mortgage payment takes up a smaller share of the average household budget than it does in many Western states. Compare that with California, Washington, Colorado, and Nevada, where the typical buyer has to spend a much larger share of income just to afford a normal mortgage payment. In California, the affordability problem is extreme. For many households, buying the typical home can eat up more than half of gross income. People are looking at the monthly payment, not just the lifestyle. They are asking whether they can actually buy a house, raise a family, and still have money left over. Bank of America's data shows that higher income households are increasingly moving into Midwest metro areas. That part matters. This is not just a story about people searching for the cheapest rent possible. Higher income households are choosing cities like Indianapolis, Cincinnati, Milwaukee, Cleveland, Pittsburgh, Grand Rapids, Oklahoma City, and Minneapolis. People are realizing they can get more space, a lower payment, and a better overall cost of living, while still being in a metro area with jobs, hospitals, airports, restaurants, and schools. For many families, that trade-off now makes more sense than paying West Coast prices. In many parts of the South and West, listings are rising, homes are sitting longer. Buyers have more choices. In some markets, inventory is now above pre-pandemic levels. That is a sign demand has cooled. But in parts of the Midwest, inventory is tighter. Fewer homes are sitting on the market, and that is helping support prices. Some of the strongest home value growth over the last year has been in Midwest states like North Dakota, Wisconsin, and Illinois. Meanwhile, several Western and Sun Belt states are seeing weaker price growth, and in some cases, falling values. The South is in a different position from the West Coast. It is not seeing the same level of weakness across the board. The South is still gaining people, but the pace has slowed a lot from the pandemic peak. 5 or 6 years ago, moving to Tennessee, North Carolina, South Carolina, or Georgia could feel like an easy decision. You could leave a higher cost state and buy a much more affordable home. But after years of price increases, that advantage has shrunk. In states like North Carolina and Tennessee, the mortgage payment compared to local income has climbed well above where it used to be. That creates pressure. The places that were supposed to be affordable are now starting to look expensive to local buyers. Florida is one of the clearest examples. Migration into Florida is still positive, but it has dropped sharply from the pandemic peak. The state is also dealing with high insurance costs, expensive homes, and rising inventory in several markets. Texas has also slowed. It is still a major economic state, but domestic migration has fallen to the weakest level in years. The bigger story is that people are becoming more practical. In 2020 and 21, a lot of moves were lifestyle moves. People wanted space, warm weather, and freedom from expensive cities. Now the decision is more about the monthly payment. Can I afford the house? Can I afford the insurance? Can I handle the taxes? Is the job market strong enough to justify the move? There's also another layer to this. The economy itself may be shifting. For decades, the US economy was heavily shaped by software, finance, tech, and information work. That helped the West Coast and other high-cost metros become extremely powerful. But now hardware, manufacturing, energy, defense, factories, and data centers are becoming more important. You can already see that in manufacturing construction. Spending on manufacturing facilities surged after 2022 and remains far above the long-term average. A lot of that investment is not going into expensive coastal markets. It is going to places with industrial land, lower costs, transportation networks, and an existing manufacturing workforce. Look at the auto industry. A large share of America's car manufacturing base is still in Michigan, Ohio, Indiana, Illinois, Kentucky, Tennessee, Alabama, and Mississippi. These areas already have the infrastructure and workforce for production. If more companies build factories, reshore supply chains, expand defense production, or invest in data centers, those regions are in a stronger position than many expensive coastal markets. This is why migration matters for home buyers and investors. You need to know whether your market is gaining people or losing them. You need to know if inventory is rising or falling. You need to know if local incomes can actually support home prices. A market can look strong on the surface, but if fewer people are moving in and more homes are sitting for sale, that is a warning sign. On the other hand, a market that people used to overlook may have better long-term support if it is affordable, has job growth, and is starting to attract higher income households. For years, the story was that everyone was leaving the Midwest and moving to the South or West. Now the data is saying something more complicated. The Midwest is gaining strength. The West Coast is losing momentum. The South is still attractive, but slowing down. It does not happen overnight. Home prices do not move in a straight line, and every county has its own story. Some southern counties are still seeing strong migration. Some Midwest cities still have problems. Some Western markets may recover faster than others. The next decade of housing may not look like the last decade. The places that benefited the most from cheap money, remote work, and pandemic migration may not keep leading. And the places that were overlooked because they were older, colder, or less flashy may start getting more attention. So if you're a buyer, investor, or just trying to understand where America is heading, do not only look at prices, look at migration, look at affordability, look at jobs, look at inventory. Those are the signals that tell you whether a market has real support under it. The Midwest is becoming more attractive because it is still affordable and may benefit from a shift back toward manufacturing and physical investment. The West Coast is struggling because costs are too high and migration has turned negative. The South still has advantages, but it has lost a lot of the affordability that made it explode during the pandemic.